Canada's housing is no longer a bubble, all right? Before you skip, let me just say, house prices over here are inflated. They're overvalued, but they're not a bubble. There's a difference between those. A bubble is unsustainably high. And as you know, it used to be that 2021, 2022. But since then, prices have been dropping. Home prices have been dropping. Rents have been dropping. And now UBS, which puts out an annual report, put out its annual report earlier this year, saying that Toronto and Vancouver, the two most overvalued cities, are no longer at bubble risk. They're still overinflated, but no longer a systemic risk, all right? This is based on 2024 data, by the way. And as you know, 2025 has been more of the same. Prices have been dropping throughout this year. So I expect that when UBS publishes its 2026 report, it's going to be an even better picture, all right? Some of you in my comments compared Canadian house prices being inflated to the US. And US, yes, the houses are a much better ratio. They're much closer to like 5 or 6 times income. Although in the major cities, that's not the case. Like in New York and San Francisco, it's very comparable to the ratio of income to the house prices. But you forget that most Americans have been more deviated to the stock market in recent years. More of their wealth has gone to the S&P 500, which 34% of it is in just 7 stocks. Out of those 7 stocks, one of them is trading at a ratio of 266. All right. And this company, by the way, isn't even growing. Its sales are declining this year and much of last year. So that one is clearly a bubble. There's stuff like Palantir, which is trading at 800 times price to earnings. That's in the S&P 500, by the way. It went in the S&P 500 just this year. The rest of them, the top 6 of the Magnificent 7, are much better businesses. I'll give you that. I personally own some of them. But even those are getting overvalued right now because they're trading at multiples of revenue that they've promised each other. All right, that is bubble territory. In fact, I'm not the only one saying this. People in the industry are saying this. Jeff Bezos said this. Sam Altman said this. People from hedge funds like Ken Griffin is saying this. Everyone's saying bubble, 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 bubble. All right, that's happening in the US. And in Canada, our bubble is slowly deflating. And that's because real estate is much more stable than stock prices. Stock prices can fall overnight. They can fall within months, as you saw during the 2021 burst. But house prices go very steady. They take 5 or 6, 7 years to go down and then 5 or 6, 7 years to climb up because it's a hard asset. There is actual brick and cement in those assets. People still need a place to live. If Apple drops by half, it's not going to change a lot of people's lives, maybe just a little bit. But if house prices drop even 5, 10, 20%, it's going to change a lot of people's lives. As you've seen over the past 2 years, housing is getting more affordable. We're in a much better position than before. One final thing. Let's say there is a crisis, a global crisis, which I'm expecting, where all asset prices fall around the world. We have a global financial crisis. The last resort in every single country is the government, right? The government steps in and bails people out. Don't tell me this isn't going to happen again. We've been doing it since 2008. It happened during COVID as well. So every single country will jump in, try to rescue their economy. But the debt to GDP ratio in Canada is much lower than in the US. Okay, we are much more creditworthy. The government is much more creditworthy in our country. So the government has more firepower to rescue the economy, which makes our bubble even less concerning. It's a hard asset backed by a more creditworthy government, which is why we're in a better position.